DeFi Slate team.
What's up, y'all? Real quick, if you like the DeFi Slate content on Twitter and YouTube and Substack, please give us a like and a subscribe on this video on YouTube. Join our channel, join the community. We'd really appreciate it. We're pumping this stuff out for y'all as much as we can, and we really enjoy the support and the community that we've built. Thank you very much and enjoy.
What's going on, y'all? Welcome to episode 37 of the DeFi by Design podcast. Here today with Robbie, the co-host of DeFi Slate. We just had a sick team call about the upcoming DAO, which by the time you're listening to this one, it's probably already out in full force. Also here today with the co-founder of an up-and-coming protocol. This protocol, I'll give you some hints. It's an on-chain asset management protocol. It is going to come out and have some new strategies and kind of a new twist to the way that decentralized asset management works on chain. We're here today with Ramon, the founder of Babylon Finance, and we're going to hear all about what's going on with decentralized asset management on Ethereum in DeFi, kind of how to bring it to the masses, how you guys can get involved with their upcoming liquidity mining program, which I'm sure is going to be coming out, and how you can also participate in strategies and everything with the new launch of Babylon. I'll turn it over to Robbie. How you doing today, Robbie? What's going on?
I'm chilling, Andy. Yeah, we had a great morning with the team. Definitely getting updated and making some moves on some really exciting stuff. I'm super stoked to be talking to Ramon. I haven't used Babylon too much, but
it's not launched yet, dude.
That's why I haven't used it too much. So there you go. So I am super stoked to learn about it and get involved from an early stage. And as we learn about it, hopefully you learn right alongside with us. So I will pass it off to Ramon. How you doing today, Ramon? And kind of give us the inside scoop on what's going on at Babylon.
Cool. Thank you both. Happy to be here and happy to be sharing a bit more about Babylon Finance that we're going to be releasing the beta next month. Basically, I can tell you first a little bit about how the story and how the idea came. Sounds good? Cool.
Yes, sir.
Basically, for the last few years, as every other person that is in crypto, I have a lot of friends that are always asking me, oh, should I buy crypto right now? Should I buy Ethereum? Should I buy Cardano? And it's like, eventually it gets old. So at some point I decided, okay, enough. Let's create a smart contract. Let's create a Telegram channel and let's discuss about how we can pool our money together and how we can make stuff happen. So I created in the last fall this Telegram group with 20 of my friends, and I created this smart contract private, and then we all pool money together and we executed different DeFi strategies, and then we were able to generate a really nice return. So then that was like the start of Babylon. Then from there it's like, okay, how we can give this to everyone, how we can give this gift to the world. So not only people that know me or not only people that are insiders of DeFi or not only people that live in Silicon Valley can access to this opportunity. Because the meta point is like the investment landscape has changed a lot in the last 20, 30 years. Our parents, the world our parents live and the world 30 years ago was totally different. Interest rates were at like 15%. Imagine like having your money in the bank account and getting 15% per year. That's a totally different world that we live right now. Right now, the bank doesn't give you anything. So, and the interest rates now are at zero. The governments, because of the pandemic, and even before that, they were already printing as much money as possible to kind of overcome the great financial crisis that happened 12 years ago. So I believe in the next 2 decades, the best places to preserve your wealth and grow your wealth is going to be in crypto, because it's going to be this new exponential age that is going to lift our boats. And then crypto is going to suck a lot of capital into the space. And we just want to give people access to this opportunity.
Yeah, and it already is. I mean, it's grown by the trillions in the last year. The overall market cap of Bitcoin and just all the space, DeFi is growing massively. The crazy part is like people are talking about like the end of this cycle, from like 2017, but like DeFi makes up 6% of the total market cap right now. And like, I would say 99% of like the active social capital and intellectual capital in building. Yeah, it's absolutely nuts. So let's get off with the basics. You guys are launching on Ethereum, correct? Why did you guys choose Ethereum to launch on?
Yep, great question. I mean, basically, because that's where the developers and the projects are, and that's where DeFi is. Right now, you've been seeing a little bit more happening on Binance, and a little bit more is starting on Polkadot, but it's still really early. It's like the Ethereum has all the main projects, you know, Compound, Uniswap, Maker, and I mean, 2 years ago there wasn't even DeFi, but now DeFi started with Maker. You can say like 2-3 years ago, but then last summer is when really the summer of DeFi started, and then all the projects have come together to the platform where there has been more innovation and there are more developers tinkering. Because the cool thing about Ethereum is all the code is open. You know, it's not like in Web 2.0 that Facebook released something or Twitter released something or Apple, and then you need to ask permission to become part of the Apple Store, of the Google Play Store, or Facebook API. Here is totally different. You know, as a fun fact, I used to work for Zynga. You know, the people that used to create games on Facebook, like 𝗵𝗶𝗶𝗵 and all these guys, you know, and they, over time, they changed the algorithm of how they serve ads for games, and they basically tank Zynga's revenue by 30%, which was nuts. Nobody can do that anymore on the Ethereum world. And that's a plus for builders.
That's awesome. Yeah, so we have we currently have a dHEDGE pool, which I was speaking to you about prior to the recording turning on, but I was also kind of voicing to you some of the issues that we're facing with as far as gas fees goes on Ethereum. And, you know, I know that L2s are coming out and all that, but like, you know, what's your broad take on the state of the Ethereum gas crisis? You know, do you view it in what outlook do you view it as for the state of Ethereum as a whole? You know, whether it's bearish or bullish or positive or negative, kind of like, what's your take on the Ethereum gas fee situation currently?
Yeah, everyone is talking about it. I mean, let's just start by saying that it's a good problem to have. You know, if you don't have any transactions, it's really easy to say, oh, our transactions are totally cheap. You like other networks. Yeah, because nobody's using them. So it's a really good thing that blocks are full and people want to do stuff, and then the gas prices obviously are increasing. And this is similar to what happened 3 years ago, although in a different state. But you remember CryptoKitties? CryptoKitties also clogged the Ethereum network for 2 weeks, and the gas prices were also insane. But right now, the difference is there is a lot more real applications, so it's clogged pretty much on a 24/7. And ETH 2.0 has been taking longer than we all wanted. So in the meantime, there are different ways that you can mitigate and alleviate this problem. One of them is going to layer 2. But for example, for us, we're integrating with all the other DeFi protocols, you know, from Harvest, Synthetics, Balancer, Uniswap, Compound, Aave. So until all of them are on layer 2, it doesn't make sense for us to move to layer 2 because we are an aggregate play. And we make it easy for everyone to participate and use all these other DeFi protocols. So for us, we are waiting, but we are looking into Optimistic, we are looking into Arbitrum, we're looking into Polygon as well, Matic, and as well waiting for ETH 2.0, because there is a chance that if they meet the deadline, all this in a year is a solved problem. But of course, this may not be. So we need to have alternatives.
Yeah, and you know, we've seen a large kind of limitation on the amount of trades that we can do over at dHEDGE because of those gas fees. But more kind of getting into Babylon and how you guys operate, can you highlight some of the differences between dHEDGE and Babylon? You know, at the surface level, they're both decentralized asset management protocols, basically copy trading types of applications. You know, can you highlight some of the difference between yourself and dHEDGE? And, you know, anything that differentiates Babylon from that copy trading kind of concept?
And Ramon, real quick, just prior to hopping into that, could you just kind of explain to our audience what the thesis is behind creating these decentralized asset management protocols, you know, and why they're important to the DeFi space and to like the whole financial ecosystem? And then kind of let's get into, you know, what Rob's saying. Like, we'd love to kind of hear more about what the differences are.
Yep, happy to do so. Great question. Yeah, asset management space, let's start that it's huge. You know, in the traditional market, it's like in the trillions of dollars every year. So it's a massive space. And basically asset management makes it easy for people to invest in assets and generate a financial return. In the DeFi space, it's really important to have this decentralized asset management place. You know, there are some things like dHEDGE, or you can see things like Yearn or Set also as decentralized asset management. And the way that it works right now, the space is kind of fragmented in two different buckets. On one side, you have the ones that are kind of active management plays, and something like dHEDGE, where you have like the figure of a manager that kind of decides, oh, let's put the money here, let's put the money there. And in a similar way set, some of their social trading sets operate in the same way. And then on the other side, you have like the passive ones that are things like Yearn, things like an index, the PI, where you just put the money, set it and forget it. That is more like your traditional Vanguard fund or your robo index funds. But we believe that there is a huge gap in the market because they are on opposite ends of the spectrum, because Yearn and stuff they are like totally trustless. So you only need to trust the smart contract, but the active ones, you need to trust the manager. They have mimicked the old world on chain. For example, dHEDGE still uses terms from the hedge fund industry, still uses the 220 fee structure and so on. We believe there's a huge gap for creating like community-led asset management, where it's totally trustless, totally decentralized, but there is not a single figure. You know, there is no reason why having the trust technology that is Ethereum that allows you to coordinate different players, there's no reason why there should be a single manager for your group of friends that needs to create a strategy. You can create a group of friends, and then all of you can suggest the strategies and you can vote together and decide how to allocate the capital. So that's basically what we are doing at Babylon. We are creating these gardens that we call that they are communities, and every community can have a different investment thesis. For example, you can have a community that loves NFTs and they get together and then together they decide to buy different NFTs and then sell them later. You can have another community that is really risk averse and they are gonna just buy stable coins and deposit the stable coins in balanced pools or any other AMMs to earn a return. And of course, you can have the DGens as well that are just gonna use Yearn, Harvest, 𝗵𝗶𝗴𝗵, and all these kind of things. So we accommodate all these different DeFi protocols. So I would say that the main difference is like in Babylon, we kind of restructure all this structure from the ground up from crypto principles. For example, instead of a 220 fee structure, where traditionally, you know, there is a 2% management fee and a 20% carry, 20% of the profits. In Babylon, this gets split between the different participants. So in a garden, you have the people that create the strategies that are called strategists. And for a successful strategy, the strategists will get 10%. Then there are the people that curate the strategy that we call stewards or curators. And these people, they also have a skin in the game because if they vote for successful strategies, they will get bubble. We can go into the mining program later and also part of the profits. And then you also have the traditional LPs. So basically, we split the 20% of profits between the strategists and the voters, and then the rest obviously goes to all the LPs. And with the caveat that to be a strategist or to vote, you also need to be an LP in the same community. So everyone is aligned. There is no free lunch here. And if, for example, if I'm a strategist, I create a really bad strategy, I lose my stake as well. So we have designed the game, the incentives for all the participants really carefully to make sure everyone is aligned. Because another thing that happened, and we mentioned in our latest post, is like in most of the professions right now, people that know can transfer the risk to people that don't know. And it's what happened in 2008. You know, people that know about CDOs and how to create these garbage products of putting all the mortgages that didn't have any value and then sell them to other people and then make a lot of money and you are transferring fragility. So in the end, you are transferring the hidden risk to other people. But in Babylon, if you do that, you're going to get the slash, your stake and your reputation, and you're not going to get any profits, and you're not going to get any bubble. So that's the main change.
Seems like a very DAO-centric, community-owned kind of platform, which also rings a bell in my head as far as risk management with all sorts of legal jurisdictions, especially in the States. You know, it's going to be, it's easy to argue the non-custodial angle with protocols like dHEDGE, Enzyme, you know, even Yearn and stuff like that. But it's so much easier when you have a community that governs the strategies rather than a sole person. That's kind of like one thing that we're working on, is to get our DAO off the ground sooner than later, so we can grow our own strategies on, you know, dHEDGE and Babylon and Enzyme, et cetera, right? And not feel this kind of legal rip of like, are we supposed to be doing this? Like, because we truly feel like we're helping people when we're doing this, and we are not hedge fund owners. We don't offer any financial advice, and it's all non-custodial, right? But when you add the community aspect to it, and it's truly governed by those who, like you say, have skin in the game, then I mean, there's no room to say that this is anything like a 2 and 20 hedge fund which has a custodial aspect to it and is very much so like, a direct, a direct service of the traditional finance world. What do you think, Rob?
Yeah, no, and I think that's going to be the best way to mitigate risk over the entire ecosystem. Let's take Babylon, and you guys are spreading risk among different communities rather than consolidating risk in the individual. Like you said, when people are in the know, they're able to transfer risk and fragility into people that aren't in the know. And then that risk compounds and it compiles into these individuals. By spreading the risk across a larger population, this was something that Hugh from Nexus Mutual dove into about how to really grow the ecosystem as a whole and make it less risky for any one individual, is to spread that risk over a larger population.
Yeah, especially when it comes to insurance. They want to insure, this is a little bit off topic, but they want to insure as many protocols as possible. Therefore, having all their eggs in every basket possible instead of all in one. In a similar sense, that's kind of where I view the community aspect of Babylon. So, what's kind of your plan to attract some of these community gardeners, if you will? How are you going to get people to say, yo, sure, I want to create a strategy? I know you touched on the incentives a bit more, but what's your plan for that?
Yep. Great question. We've been really, really careful from the beginning, the way we designed our seed round. For example, we have almost 80 people that participated in our seed round, and they are all of them DeFi experts, and they are knowledgeable in the space. So we expect them to be our first gardeners, our first strategists that seed the platform. And at the same time, we started this settlers program. That is what we call our beta. And we open it, and we have an email list that we are gathering. And next month, we are going to start inviting people from this settlers beta. And yeah, it's going to start soon. And it's really interesting what you said also about insurance and risk. For example, we're talking with Nexus Mutual as well. And we totally agree. For example, imagine that you can create a strategy in a garden. And then, for example, you do this complex operation in different way. You say, okay, I'm going to deposit this Ethereum compound. Then I'm going to borrow DAI with it. Then with this DAI, I'm going to buy these two assets to put them in the liquidity pool in Harvest. And then I'm gonna use those LP tokens, and I'm gonna stake them. And then I'm gonna buy insurance of Nexus Mutual for all these protocols that I'm using in this strategy. So you can insure all the strategies that your community is using Nexus Mutual. So this is something that we are also planning, because it's really important that if we wanna attract more people to DeFi, it needs to be both easier on the UI level, but also on the risk level. So yeah, it needs to be more approachable.
Again, in the level of legalities, a lot of these hedge funds 2 and 20s are insured almost by, I guess FDIC, but more so by their backing of supporters and basically by the banks, right? Yeah. In this case, you could offer this community management, investing style, strategy style, which would likely outperform due to the sheer way that communities rally together. But you can basically also offer this idea of insuring your assets in case of any hacks, which is definitely one of the biggest things that has stopped us from doing massive amounts of outreach to get people into our current pool. It's well, A, we don't really know what we're doing, but we've crushed it. But B, it's we don't really have any backup plan if keys are lost or if dHEDGE goes down or, right. So it's having that ability to have insurance is going to be huge for, asset management. And honestly, I think this is one of the biggest sectors of DeFi that people are sleeping on, because I think this is one of the easiest ways to get billions of dollars into DeFi. Because ultimately, I'm not a pessimist, but I simply view people as wanting to have work be done for them in a lazy way. And what better way than to be able to put your money with people who you trust, who is non-custodial and is insured through some sort of cover, right? And basically not have to do anything, pay a tiny bit of fees to be a part of the group or of the strategy. And then all of a sudden, you're making money and active in DeFi without you even knowing it. I think that's kind of huge. Do you see a future where, you can have a one-click button that enters you into a Babylon strategy on an app like a Robinhood, right? Or like a Argent, right? Where like, like instead of seeing all the detailed strategies and all the fees and all the community, you just, oh yeah, I like that one. It's like it says, either like kind of aggressive or medium or, conservative. Okay, done. Right. And that they're literally putting it into like a Babylon strategy that has so much code and smart contracts behind it. But to the end user, it's just investing in crypto passively.
Exactly. That's the way we are architecting this. In the end, every different garden, every different community has different investment thesis, different levels of risk. So you as an individual say, oh, I like this garden that is super safe. I'm going to put 70% of my portfolio there, and this one is insured. And then for 5% of it, then I'm going to put it in this other super risk high garden that maybe is not insured. So you can create your portfolio by investing in different communities. And it's really important, as you said, that for LPs, for normal LPs, it's just a one-click thing. You can just deposit and forget about it. Then if you want to get additional rewards, if you want to get extra profits, you can learn and you can suggest strategies, or you can vote and you can create strategies, and that way you can have the potential for greater return, but also you can lose money. So we designed so only people that provide signal are going to get extra rewards. So you cannot just click buttons randomly like a monkey, because you can lose. So Babylon is going to reward accurate signal.
Yeah. So you guys are going to be able to use strategies on like most DeFi protocols. Like it's going to be like an open kind of world of like anything goes ultimately that is like, they are able to do with these protocols. Like you said, like if you want to go to Compound and deposit some ETH and then borrow stables and then go farm and an LP, on Uniswap and then bring that token over to elsewhere, like basically all of these capabilities are going to be available. So this is truly like, this isn't just like trading. This is like everything in DeFi can work here.
Yep, exactly. Lending, AMM, providing liquidity, insurance. We are working hard to make sure we give all the tools. So, and then every community can choose what to do with those tools to create the product that is worth for the community. Another way to think about it is we are similar to InstaDApp or Sirion or Displayer, but instead of just for yourself, you can do it for your family, you can do it for your group of friends, or you can do it for your community.
Yeah, that's awesome, because it differentiates from something like dHEDGE, which is more of an actively managed fund, and starts to look more like what you're saying, InstaDApp, where you can aggregate a bunch of these different DeFi protocols and then interact with all of them at once. And when you first mentioned it, I was a little bit confused on the gas situation, because why? Well, the reason was because I guess I didn't understand quite the extent that you guys had interoperability. And once you are connected to these different dApps, if they're on one L2 and another dApp is on another L2, then that presents a problem for you, because you need to find a way to connect to both of those at the same time.
Exactly.
So, it seems like there's going to be maybe some limitations when it comes to gas fees on maybe you guys need to use different bridges to connect to different blockchains to be able to integrate all of these different applications.
Yep. The simplest ways that we're thinking to optimize our gas costs right now are two. For one, all the voting to vote strategies happen with signatures, so it's free. So that way there is no gas costs for participating in your community and vote on strategies. And the other thing we're doing is we are sharing all the gas costs of strategies. So if you execute a strategy, the gas costs of executing a strategy are shared amongst all the participants. So for example, if you have 50 members, even if the cost to execute a strategy is like $600, it's not that much, it's $12 per person. So suddenly it becomes reasonable if you have a big community. So that's why we're socializing the gas costs in a way.
So like with this DAO that we're creating, say by the time, a few months go by, we got, 50, 100 people in there. Basically what we could do is we could all put some money in there together. And then we'd be able to basically vote on how it's used and the structures. So what is the proportion of payouts look like? Is it like, okay, the pool starts with 100%, and then as everybody adds into it, say if say if 20 people add $5, you get $100 and everybody owns 5% of the pool? Or is it, like how does the proportional of profits work?
Yeah, we explain all this in the light paper because it's a bit complicated.
Yeah.
But basically, when you deposit money into the garden, then based on the net asset value of the garden or the community, you get your token participation that represents your participation in the garden. Yeah, and then
so it's basically like a proportional.
Yeah, exactly.
Okay, cool.
Also, it's important to know that the strategy, for example, a strategy may be active, and you may join after the strategy has become active, so then you wouldn't get the rewards or the profit from that strategy if that strategy is already in flux. So there are a few caveats there. And one thing that I wanted to mention too is like we designed it to be like capital efficient, and so the money is always gonna be worth it. It's not like in dHEDGE that if the manager gets more money, he needs to allocate it to the strategies. Here, if a garden receives more money and there are active strategies, automatically the garden will allocate the money to the strategies that are active. So there is no need to kind of be looking. It's like, oh, I received more money, I need to put more, I need to put more. No, it automatically rebalances.
Facts. Yeah, that makes sense. That's exactly as it should. As it should work. I got a bit of a controversial question for you. A lot of people come into DeFi and they think about wanting to be their own bank and to take control of their finances. And obviously this is just a single subset of folks, but there's certainly a lot of them around. What's your answer to when somebody says, why should I invest, in a fund or in a garden or in this kind of aspect, when the whole reason why I left my financial advisor was to kind of come into DeFi and do it on my own? Like what's the allure to doing decentralized asset management? If the whole point of DeFi is kind of being bankless and kind of doing your own transactions and finances.
Yeah, that question has different angles. I mean, in a way, you're still being bankless. You are not using a bank. And, in Babylon, it's designed that still, if you deposit into a garden, nobody can touch the money that you deposited directly. Not the strategist, not the creator of the gardener. So you are the only one that can access it. So if there is no smart contract vulnerability, and we're working really hard to make sure that doesn't happen, there is no way anybody else can access your deposit. So it's similar to Compound. That is like, oh, I'm putting my money in Compound. But yeah, still Compound cannot, as a protocol, cannot take your money. So in a way, you're still being back. But I also wanted to make the point that this is a range, and it's kind of, it goes from 0 to 100. So it's not going to be like, oh, 0% totally backless or 100% I give my money to someone to handle it. So I think if we want to bring more people to the space, we need to offer several layers for people to feel comfortable. My grandma is never going to feel comfortable using the UI of any DeFi application these days, but they may feel comfortable using other layers of abstraction that kind of looks like a bank or a fintech company right now, and just clicking one button and she can deposit money and then a button to withdraw. And we need to offer these layers of abstraction. So right now, and what you mentioned before, like one-click button, for example, Babylon could integrate later with applications like Dharma, for example, and just have one-click button on a mobile application that lets you do the on-ramp, so you can transfer your dollars into crypto and then use those crypto dollars to get into a garden.
Yeah, that's awesome, and it kind of speaks to the concept and the theme that we've been seeing across a lot of new protocols popping up, working on bridges, going straight from a centralized exchange or some sort of fiat account straight to layer 2. And one-click buttons are going to be a great way to do that. I think what you said about kind of scaling the bankless journey, it's really important because, Andy and I are degens, so we hopped right into crypto. It was very appealing to us right away. But someone, like you said, a grandma or someone that just has some more, I guess, I mean, it's not responsibility, but just is a little bit safer with their money. They're a little bit more risk adverse. They kind of need their hand held as they dive deeper and deeper into crypto. And someone, isn't going to be ready to just start picking out coins and investing in things right away, even if it's, some of the more blue chip type assets. That's why the different like sectors of traditional finance exist, right? Some people are managing their own money. Other people do just have a savings account and a checking account. But then you get into some, different, more creative ways to manage your money, and you start to tackle index funds and money markets. And those are the applications that we're starting to see on DeFi. Babylon being pretty much the community-driven index fund that is very customizable and can be created by anyone.
And Ramon, on that note of particular subsets of people that are interested in managing money, and are part of the world economy, what subset do you think is the most important to bring into DeFi as soon as possible? Is it institutions? Is it people who have 401ks with advisors? Is it the young people who are graduating out of college? Is it the millennials who've been in the workforce for a few years? Is it the older people? Who do you think, what generation is most important to bring into DeFi, to reach critical adoption, and why do you think it?
Yeah, that's a great question as well. I see the adoption as an S-curve, the same way it happened for the internet. And I would say we are still in the early stages. So we are maybe in the early majority. And then to be able to bring the skeptics, that is usually a majority, late majority, and the laggards, you need to have more, it needs to be perceived better. So I think institutional adoption is helping, and you see it right now with Fidelity, for example, and a lot of the big hedge fund managers in the world have been talking really positively about cryptocurrencies, like 𝗶𝗶𝗶𝗵. And that's helping. So, and once the institutions adopt it, it gets legitimate. More people see it as legitimate. And the other thing, as the market size increases, the volatility goes down. For some people, also see it as a bug. I see it as a feature, because if you want asymmetric upside, if you want upside, because what you want is a call option on the future. So you want a lot of upside, but little downside. But most people say, oh, the volatility of Bitcoin is crazy. Well, if you want it to go up, it will need to have volatility. If you just want it to not do anything, you can buy a treasury bill. You can buy a 1-year treasury, and it will just stay the same way you have it. So in terms of what do we need, right? I think we are going to leapfrog, because the internet took like 25 years. The internet started in the early 90s, but then until 2005 or so, you didn't see kind of like the unique things that the internet could do, like things like Uber, things like Airbnbs that have disrupted a lot of markets. But at the beginning, you ask in the 90s, and there is an interview with Andreessen asking them, oh, what do you foresee to be the best application of the internet? The only thing he could think about was like an internet library, because he's kind of taking something from the old model exactly onto the internet. And the same way, I think right now, a lot of crypto applications are kind of moving the old model onto crypto. But in 5 to 10 years, we'll start seeing, and we are seeing them already, like things that you can only do on crypto that you could not do before. It's not just, just put insurance on chain, let's put derivatives on chain, let's put futures on chain, all those things that are necessary and that will happen. The same way, I believe that in the next 5 to 10 years, all the assets are going to be tokenized. So, you can do it right now with synthetics as well. You can buy gold, you can buy bonds, you can buy stocks, and with Luna and Terra, the same thing. But all these things are going to happen, but it's going to change really quickly in the next 5 to 10 years. So I could just focus on gaining legitimacy. And I think institutions are good. And then slowly you will get more of the Silicon Valley ties, more of the fintech layer. And as the fintech layer gets more into crypto, this is happening. Of course, Twitter and Square are looking into it. Jack being super bullish on Bitcoin. So it's going to happen. It just takes time. And the short answer is it takes time.
Yeah. And it's super interesting to see just kind of the evolution of crypto as kind of a natural consequence of the internet, right? Like first we put information on the internet, and now we're putting money on the internet. And crypto really is like an internet of money. So it might be a interesting exercise to just kind of think about, like, what is the next integration of the internet into like our social lives. And I don't have any answers like right off the top of my head, but I think there's going to be certainly like things that continue on this path of tokenization, like real estate. I'm sure there's going to be some business applications there where people start to tokenize their homes, and then we can, shape up how mortgages are paid and given out. and potentially like split and underwritten a different way. So I definitely think the instantiation of real assets into a blockchain as far as tokens and more virtual assets will allow kind of even more interoperability between the digital world and the physical world.
Yep. It unlocks, in the end, it unlocks more GDP. Because right now there is a lot of value that is locked. For example, people that were trading cars locally, physically in there, that value was unlocked. And the same way people playing video games where they didn't have monetary value placed to their skill. But right now with the metaverse and esports is also growing, and esports and cryptocurrency is one area that is going to intertwine quite nicely. So you're going to be able to price everything on real time and associate value with it. So this is going to unlock a lot of GDP that wasn't there before. So it's not like, oh, it's a part of the pie. No, we're making the pie bigger. And in the end, this is why I'm really interested into crypto, because it's like, we are increasing the freedom for every citizen in the world, because a lot of trends in the physical world are going the opposite direction. So I'm really hopeful that crypto can be the thing that gives more freedom to everyone. The same way that 500 years ago, only the church could print books, and then we took that money away from the state. Hopefully being able to handle your money is something that can be up to each individual as well.
Yeah. Yeah, and it's going to be super interesting to see how much people take that opportunity. We are certainly aware of it, that it's going to continue kind of making itself prevalent as time progresses. It just kind of speaks to me like we're all still early. Even though prices are super high and they might correct, like in terms of technology adoption, I think it is certainly very, very early still. Because people are frankly scared of having custody of their own money. I think people see it as frightening, more taking on more responsibility rather than a freedom.
Yeah, and that will still happen. Some people will never want to take ownership because they are scared of themselves or they don't trust, and they will pay other people to do it. But the key thing is, like, this other person can do it in a way or through this protocol that still, doesn't have total ownership of the money. Only you in reality have. So we can put these layers of abstraction. So it's still better than the traditional world. But if you don't want to worry about your money, you don't have to. Somebody else can take that burden for you, and you can pay for that service.
Yeah. It's really interesting what's been coming about. I'm kind of curious what your favorite part about DeFi is right now. Like what's your favorite aspect of DeFi?
Yeah, I mean, it changes so fast. As every day there is so much new stuff that it's difficult to keep up, even working on the space 24/7. Lately, I like, for example, quite a bit alchemics, like the concept of self-repaying loans. I think it's really powerful, and it can be another primitive that is reused lately as part of the DeFi stack. But in the end, I mean, the basic concepts of Compound and 𝗵𝗶𝗴𝗵, I think, are really powerful, and they have unlocked a lot of innovation. And now I hope the concept of communities and communities being able to unify their efforts and their money and direct them towards a common cause, I think it can help a lot of people, because there are really few people in the world that understand DeFi. If you put it in percentage terms, it may be like 0.001% people that know DeFi in the world. So it's like how we can give this opportunity to more people. So if you have these communities where there are few people that know how to DeFi, and then they bring their friends together, then we are bringing everyone along. So that's the goal with these communities and these gardens in Babylon. People that know share their knowledge, and then they get rewarded for it.
Yeah, and you can tell that Babylon is solving this problem and impacting it directly. You like you said at the beginning of this podcast, Babylon is all about bringing the tools to the people so that the communities can organize themselves and then use the tools appropriately.
Yeah.
And these tools can benefit each community a little bit differently, and everyone can use them to their fullest potential. So it's super cool to see. And maybe we can bring it back to, actually the features on Babylon and how they're coming out over the next few months. You mentioned the Investor Alpha and then some of the different mining programs. Could you speak to kind of that liquidity mining program, when it's coming out, how we can get involved, and kind of the goal with that liquidity mining program?
Perfect. Yep. We'll need to propose it and the community will need to approve it. But basically, Bubble, there is a governance token associated with the protocol, and there is going to be 1 million Bubble. And the idea is like 50% of all the Bubble is going to be designed, it's going to be allocated to the mining program. So Babylon needs to be owned by the users. For completion, the team is only taking 10%, and the rest is going to investors and some for the liquidity program. So around 70% of the Bubble is going to all the users of Babylon. And the mining program is designed to last more than 10 years, and it's kind of front-loaded. So the rewards of the first quarter, the people that use the platform in the first quarter will get more Bubble. And basically, we're going to give Bubble to people that create successful strategies, people that start gardens, people that deposit, people that vote. And depending on how these things perform and how accurate is that signal that they are providing. If you are both, for example, if you, Robbie, create a strategy and then someone else votes on it, then if the strategy performs well, you will both get rewarded. Obviously, you will get rewarded more because you created the strategy, but the other person will also get rewarded for providing accurate signal on that strategy. So we are using the Bubble to both align the incentives of all the participants, and then as a governance to decide in the future, which other reserve assets to add, which other integrations should the protocol work with, and so on.
I know we're running kind of close on time here, but I wanted to put out there, the concept kind of reminds me of Wall Street Bets. Like, I'm sure, you were aware of Wall Street Bets when they took on, I forget the name of the hedge fund, but it was around GameStop, and, this hedge fund had a huge short squeeze. So everyone knows the story. And I saw like Wall Street Bets announced their own token, and they're doing, kind of a similar idea with community investing and trying to remove like that big information gap between retail and institutional. I got to say, I don't know enough about their token to suggest any kind of like collaboration between Babylon or highlight any differences between Babylon and Wall Street Bets, but it definitely sounds like philosophically there's synergy there between the different communities of Babylon and of Wall Street Bets.
Yeah, definitely there is some synergy. We have actually talked about it. We are taking different approaches. They don't have so much information also publicly at the moment, so it's difficult to know exactly what the plans are at the moment, but we are open to collaboration because, as you said, philosophically we are aligned. We are not so focused on the stocks, like, for example, the Wall Street Bets community traditionally. We are more crypto native. For example, I work on 𝗵𝗶𝗵𝗵 before, other co-founder on our team, we also work on 𝗵𝗶𝗵𝗵 as well. So we come more from the inside crypto native, while they are approaching it more like the Reddit community and bringing the Reddit community on chain. And that may cause some, we are both attacking a similar problem from different angles. And in the end, that's the beauty of this ecosystem. Everything is open, so you can plug into each other if you need to, and you can build on top of each other, and in the end it would benefit the whole space.
It's certainly it's an apparent problem, and it's being attacked from a few different angles, like you said. So hopefully we can find a creative solution to this problem that ultimately makes the more average person more free,
Exactly.
And that's accomplishable through cryptocurrency and DeFi.
Yep, I agree.
Awesome.
It's awesome.
Yeah.
I'm moving forward to the launch, hopefully in June here.
Yep. Do we give a bit more details about the timeline? We are testing the alpha right now, and we'll soon invite our seed investors to test the alpha. And then next month we'll start our beta program, the Settlers program, and then we'll kick off the mining rewards. And then in June, July, will be like the more public launch.
Awesome. Yeah, y'all have been working on this for a few months now. I honestly thought it was already launched. So that's a pleasant surprise to me. We're still at the predecessor steps to this mining program, which is super cool. Everyone can get in early stage and start to stack Babel.
Yep. And look, we are looking forward to all the feedback that we can get. Our light paper is also published, and we have a Discord and Telegram groups where, you can, if you're interested, please come and share your thoughts.
Beautiful. Thanks so much for coming on and talking about Babylon and everything that you guys are doing to build. We had a pleasure and I learned something. You know, I enjoyed the conversation and looking forward to the launch and supporting you guys through it.
Thank you both. This was great.
Yeah, this was super, man. Thanks for coming on.